Welcome back to my channel, traders, for another trading education video. Today I'm gonna be testing the moving average indicator. Even though I don't use indicators at all, I'm very curious to see if they actually work or are faulty. So one way to find out my mission is to break down this indicator to its core to find out if it actually works or not. This indicator is very popular and used by many traders to trade according to Google, but let's start with the basics. Moving average is essentially a trend indicator that gives buy and sell signals, and as the name suggests, is based on the average. Now, there are many types of moving averages. Some of them are weighted moving averages, triple moving averages, exponential moving averages, simple moving averages. There are so many, but I'm just mentioning common ones that are used for trading. In this video, we are only going to focus on two main moving averages, which is simple moving average and exponential moving average. Now, simple moving average is the average price over a specified period. The average is called moving because this indicator is forming a line that moves along with the chart as the average price changes. On the other hand, exponential moving averages shows the price changes over a period of time. The difference between those two is that exponential moving averages puts more weight on recent data points, and I know this from first hand because many traders prefer exponential moving average because of it. Now, everything is deemed useless if you actually don't know when to buy and when to sell with these indicators. The buy signal for simple moving average is when the price crosses above its moving average. Then this is a buy signal, and if it crosses it below, then it's a sell. Now, with exponential moving averages, the things are a little bit different because there are two average lines, one for short period and one for long period. When the short-term exponential moving averages crosses the long-term exponential moving average from below, then it's a signal for an uptrend. That's when you need to buy, and the opposite when you need to sell. I'll show you how to put these indicators on trading charts and how to fix them to optimize your result. Apparently, in retail trading, time frames matter because we are gonna use this moving average for intraday periods. So short-term strategy, I'm gonna use the 5-minute to test this moving average, and also I will only test exponential moving average, so I'm assuming that this is the best and many people are using this moving average the most. Guys, listen, I study mathematics, okay? For me, it's natural to try and approach it this way, so let's see what the average is first. Let's say for a minute we have a market order for one lot for buy at price 1.27111, and again an aggressive market order of 9 lots for sale at price 1.27421, and so the moving average line will be formed in the middle at number 5, and essentially will make you think because you don't see these order numbers that you need to buy as soon as a candle goes above the average line. You will trigger a buy order, when in reality sellers are more powerful and hence the market will eventually collapse very quickly down due to more sellers. The same happens with the exponential moving average because it only gets data and weight from the days that you indicate. What if the previous days are actually not relevant to what's happening to the market? What if the month had many bank holidays in this period or something unexpected happened to the market, then it will affect the average in a wrong way because it's based on past data. If you noticed, sometimes with the indicators, the signals they give are faulty, late, or non-existent opportunities. This happens because indicators are formed based on past movements and data. So when you wait for them to be formed, you lose potential opportunities in the market. This is why I don't fully trust them. They are somewhat lagging because of this. From Google, it suggested we put short-term moving average at 8 period and long-term moving average at 21 period. These numbers essentially in what I am thinking is because the 8 is early in the month and 21 is late in the month. This setting is the most common and this is how you can do it in the platform. I'll use for shorter period the purple thick line like this and the black thick line for the longer period like this. Now the exponential moving average is ready on our chart. Now, if you remember correctly, the buy signal is when the shorter period, aka purple line, crosses the longer period, aka black line, from below, and sell signal when the purple line crosses the black line from above. We are all set now, so let's look for potential opportunities in the markets. I will only look for UK and US sessions because the pair is pound dollar. It doesn't really make sense to look any other session. Here I have actually separated the days and session times that we are interested in to not waste any more time. Now the moment of truth and what we were all waiting for, the test. This is the first day of our test. Now you can see pretty much on the first day only one time here it crosses one line over the other. It didn't give you any other option down on the path of the day to enter again. Here it says that the purple line crosses the black line, so the short term crosses the long term period from above, so this is a signal for sale. I'm assuming that people will start selling around here because here creates a gap from the two lines, so maybe people were more sure. Then they will trigger the sell until here. So from this point of view, it seems solid the first day. But then again, if you think you can make more money and you don't exit around here, you could see this and you will think that the signal potentially is reversed. I'm not quite sure if that's the right strategy. So either he will be patient because he didn't see any more signal for buy, or he will exit being afraid of a reverse market. Let's move on to the next day. So we pretty much have 3, 4, 5 signals. One here, 2, 3, 4, 5 signals. This example, it basically says that the purple line crosses the black line from below, so it's a buy signal. When here it creates a gap, I'm sure that people will feel strong about buying. But then again, the candle is a sell candle. I'm not quite sure if people will enter here or somewhere here. If they enter in this candle here that they think is bullish and will think that the market will go up, it could be catastrophic because it actually doesn't go up. It fluctuates around the same place. And here, it gives signal to sell. The signal is actually correct because it's actually going down here. So I'm not quite sure which signal will they follow. The buy signal, the sell signal. It's kind of difficult to understand this situation here. In 1 minute it gives you signal to buy and in another minute it gives you signal to sell. Then here it creates more confusion because it says buy for 1 minute, then sell for 1 minute, then again buy for 1 minute. And it actually doesn't give you the space to buy or sell because it goes up and down and makes the indicator not reliable. So which signal will they follow on this day? I don't know. Here we are on the third day. It still continues to create so much confusion for traders. It gives one signal here, one here, second signal, third signal, fourth signal, fifth signal, sixth signal, seventh signal. If you actually know the day, you will see that the correct price action is to go up. But here it gives you signal to sell. If you sell, you can sell for a few moments, but then it goes against you and it can make you lose money or potentially be at a break even. But I highly doubt this because you will enter around here. So if you exit here, okay, fair enough, it could be break even. Then if you try your luck and enter again a sell signal, it's the same thing. It's actually stable and then it has a breakout up. It's basically telling you it goes up, down, up, down, up, down. And then the right signal comes at this time of the day that buyers seems to be stronger, and then if you enter here you're in luck and then it goes up. But after exhausting all your buying and selling power here from losing, I highly doubt that you will enter in this movement here. You can't really distinguish what is actually happening in that day when the market is still forming. Now the market is already formed, so it's clear, but when it's in action, it's difficult to understand with this indicator. This is the fourth day. First of all, we have 1 signal, 2 signals, 3 signals, 4 signals, 5 signals. On average, if you noticed, on that time period, it gives around 5 signals. Here we have a buy signal when the purple line crosses the black line. And I'm assuming that people will enter around here. Their profit is until here. And then it moves against them. It's so wrong. And then again, it gives signal here. But if people enter here, they don't have room to go down. It goes reverse again, so again they lose money. Here they are actually again exhausted all their power from losing. It gives a right signal to buy. If you buy here, you can follow the trend until here. But again, some signals they give are correct, some signals they give are wrong. So how can you distinguish and be sure that the signal that you are going to follow is the right signal? That's the mystery with this indicator. It's difficult, guys. I'm not sure if I would trust this indicator with real money. Let's move on to the fifth day. Surprisingly enough, there are not so many signals this day. We only have 1, maybe 2 and 3. Maybe people want to buy here, but then it's uncertain. Maybe they will wait because it's kind of close to the other line, and maybe they will think, oh, it's not certain, we are not gonna buy. And the same here. And here maybe they think, okay, it kind of goes up, so it's an uptrend, maybe we buy, but then there is a small reversal, but they have to control their emotions because it goes up and down. It doesn't really do anything here, and then there is a spike up. Some may exit, some may stay in this trade and get this spike over here. The best move of the day with this indicator would be around here, because it's pretty much clear around here that the day will go down. And if you enter here, it's kind of frustrating entering here being sure that it will go down and then have some tails here that will go up. It kind of tests your emotion, but if you stick to it, you will get a massive return for that day, and around here you can exit. It's like the first signals that this indicator gives are faulty, and the late signals are more correct than the first signals. Tell me, what do you think in the comments below? Do you see what's happening here? Why so many people trust this indicator blindly? I don't get it. If you guys have doubts about some indicators, break these indicators down to their core to see if they are actually valid. Now, I'm just improvising. I didn't have any plan whatsoever. But from the beginning, while making this video, I felt that some things don't add up. Something was off. Consider changing your own trading style. Go to this video and I'll show you the tools that actually matter in trading and that the big players are using them. And you can DM me on Instagram for any questions you have. I'm here to help you. Like, comment down below and subscribe, and I'll see you guys on the other side. Bye.